that came into my radar is their cash flow. They have a consistency of cash flow, and their price, their stock price, is actually 5 times their cash flow. So that's another factor came to me in order to evaluate the company. So I was like, well, let me take a look at American Eagle. I mean, I haven't shopped for a while. And so we wonder, like, what do they do? Like, so American Eagle, they have a target customers that they focus on, usually between age 15 to 25. These are their customers, the teenager that they focus on if you go to American Eagle, but they are famous and known for the quality of jeans that they sell. So that's one thing that always we know. But recently, that if you're familiar, there's a store is really popular, getting popular in the United States. It's called Aerie. And what is really interesting about the store, it's more promoting inclusivity in terms of women. The way that they focus on larger size, more like curvy style clothes that they sell. And what we notice is that they have stole a larger market share from Victoria's Secret. I think in 2006, Victoria's Secret, they stopped their, by the way, Victoria's Secret, it's part of Ella brand company. And so what they did, they stopped selling a swimsuit for like a larger size. So who came in and stole that market share from them? Aerie, which is as a part of American Eagle. So there are 115, so there are total Aerie as well, like American Eagle, around 1,200 stores. 115 stores is Aerie, but the question is there a growth in American Eagle, and who's driving that growth? Personally, if you look at revenue growth with American Eagle, 3%, they have been growing at the past 10 years around 3.39% compounded annually. So it's not a lot, but you wonder who's driving some of that growth, and is that growth will be sustainable? So there's two things. I'll break down the growth. There's one part is driving the growth is that Aerie, which is really getting popular, especially their e-commerce market is booming, but also the international market. One thing that you have to pay attention to it, I think I went here and analyzed the stores for, let's see here, the stores for the past 2 years, and I think, it's really hard to see it here, but who's driving that growth is actually international growth. So they are separated they are located in 24 countries internationally. And one thing that you have to pay attention, all these stores that are located internationally, which is around 213 stores, are licensed stores. So they are not owned by American Eagle. They license them and they get royalty from these countries. So that one part of revenue as well, royalty fees. But what is driving it is Israel is driving the growth. Saudi Arabia, you get Philippines, Greece, Kuwait, and Egypt. These countries are driving the growth.
Wait, not China?
So they don't have any stores in China. And really interesting, they don't have any store in China. They don't have any stores in China. But here is interesting. So Japan is one of the countries that they have an issue. If you read excuse me, if you read a Q2 earning calls, the CEO mentioned hey, we're gonna exit. We'll have some issues in Japan. So Japan, I think they own 24. Let's see here. Japan, they own 34 stores, and they have an issue with license and royalty fees issue. So they probably will discontinue the partnership, and they're probably looking for a new partnership. But there's still a huge growth in Japan. China is, I think, might be one of the growth that they are be looking for in the future. I haven't read it, and I haven't finished actually my analysis. So these are kind of the factors that I look for. Tom hit PE. PE is kind of traded around 10. Price to earning is around 10, which is still undervalued, but I usually don't like to look at PE because sometimes they have one-time events. And I usually like to go and normalize that PE ratio in order just to help me make sure that I'm not overpaying for the company. So
First question. So what's the debt? So you have the debt. Why no interest?
So all the debt is, as if you're smarter than me in accounting. So it's all payable. So account payable that they have to pay back.
To suppliers. Basically, they buy their like material from suppliers without like paying right away.
That's right. But so that's account payable, but also they have deferred revenues. So usually, you know how it works, that quarterly accounting, usually they send out these shipments, and until they receive the check, that's where they recognize it on their income statement. So they have some deferred revenue once they got that money back. Could be that some of the deferred revenue could be gift card that they sold out, but they are still, once people will redeem these gift card, they will do reverse journal accounting. Not an accounting, but
so they don't have any debt. They
it's
don't
all,
have any debt.
So if you look at the income statement, there's no debt. All of the debt, no interest.
Wow.
They don't pay interest rate on it. It's around 500 million. If you look at the revenue is around 4 billion. But if you look at Earie by itself, their compounded growth is around 17%. If I am a conservative person, like the CEO talks about, like, hey, the Earie by itself is gonna hit 4 billion in like a couple of years. If I'm a conservative, I call it like maybe 10% growth. I think they are gonna hit like 1 billion within 3 years.
Okay, so what is Earie like? What's the marketing for Earie vs like American Eagle? So what's the difference between American Eagle Store? If I go to American Eagle Store or if I go to Earie?
So Erie's more like targeted toward women. It's only women, sell only clothes women, or like usually larger size women, curvy women. But it's promote that inclusivity that they want to include.
Is it larger size?
Larger size women.
I think it's all sizes, including larger.
So they have another brand which is I haven't analyzed. It's called Telegate. Have anybody used it? Or
did you shop there?
I haven't shopped there. I would like to go shop there. No, I'm just kidding. No, I would like to go actually visit American Eagle store as well, Earie. It would be weird for me to go to Earie by myself, so sometimes I tag along like friend, female friend with me to go, hey.
Maybe they just want to go back.
Anyway, so the question is the company shareholder friendly, and how do you know that? How do you evaluate that? For me, is that I evaluate it based on two things. If I can look at it, it's a buyback shares. We talked about always how's the company's returning value to the shareholder. Is the company has been buying back shares at a 2% rate, but.
Okay, sorry. So why not give dividends and just buy?
I'm gonna get to that in a second. So they initiated a buyback program. It's I think I wrote the numbers here. It's around 25 million buyback. They authorize it.
A year? Or
No,
just one
this
time?
is a one-time program. It will expire in 2021. The average price that they are buying at is around $18, and American Eagle is traded at around $16 right now. How they are paying dividends is around 4%. 4% growth rate. What else? Yield is around 3% dividends. So they are doing both, buying back shares and paying dividends around 3%. They pay usually around 40% of their net income back in dividends. So that's kind of like
40%,
things
wow.
40%. So
what was their net income?
So their net income is averaging around after they pay all their expenses. I'm gonna look at like if you average, it's around 300 million.
300 million.
Yeah.
For a 4 billion sales.
Yeah.
So they're like cost of sales is like huge.
So good question. So they're thank you that you brought that. So their gross revenue or gross margin is around 30%. We're seeing some like they are getting more like controlling of that cost in order to increase that margin. However, if you look at the retail industry, you're always looking
Yeah,
at
it's like
30% because there's a lot of pressure, there's a lot of competition in that industry. What else? I mean, it's better than Victoria's Secret because I think they focus on a niche market that more reaching out to women with larger size. I mean, I haven't been in Victoria's Secret, but I would like to check out like
How much of the sales are
What?
overseas?
How much of their
Sales.
Are overseas.
So I would love to know that, so they don't break it down for you by so I usually go for the past like 3-4 years, like read the 10K, but 2019 actually they didn't put anything about breaking it. Same sales store is growing at 8% annual, year over year. One thing, what else?
Well, usually when they don't break it down, that means their sales aren't very
Hi.
high.
Yeah.
Or strategic, but in this sense, I don't think it's high.
Yeah, I mean, I don't know because it's a royalty fees again. It's just they are collecting royalty fees. I know from Japan because if you read like the Q2 like conference call, they talk about like 20 million. That's only coming from Japan. So imagine like 20 million. Probably they have like 700,000 revenue per store in Japan. If I'm doing the math, this is roughly math. Like rough math. What else? Wanted to talk about a couple of things here.
What's their future outlook like?
So seasonality, I'm gonna get to that in a second. So seasonality, I think, if you look at what is driving the revenue, usually buyback, like school time frame and holidays. These are kind of like helping the sales. And the sales will tend to be more flat in other times. Tom, you are asked good questions. So, like, what is their future growth? I think their future growth will be more focused on Erie. I think Erie, is gonna bring all the growth. If I'm projecting, I'm being more conservative when I'm projecting the revenue. I usually look at 10 years. If I'm saying that, and usually if you haven't looked, I usually go like forecast each like element
In the income statement?
in the
Okay.
income statement, and then roll out to balance sheets and roll it out to cash flow, because I'm more interested in the cash flow of the company over a long time. But if I'm looking at the revenue, projecting it at a 3%. Year over year, starting from 2020. Let's see here, Tom. I'm gonna answer your questions. It's supposed to hit 4.7 billion in 2024.
At a 5% margin.
No, at a 3.39 growth rate annually.
Meaning their profit margin at the end is 5%.
Yeah, so their net profit margin as well, if you look, I think I do have it. Their net profit margin is around 5%,
Yeah.
which is actually decrease from last year trends. And just that's mostly the company, if you look at it, has been spending a lot of money on promoting Erie. That's part of like their plan.
Has it always been about 5%?
It usually, a couple of years it hit 8. But if you look at like a smooth average, it's around 5%.
But never above 10.
No, never above 10.
Okay.
But if you look at like the question is the company is undervalued. I haven't finished all the math. I usually go spend usually 40 hours at least analyzing a company. So I forecasted all the financial statement, roll it up. I usually go with 7 methods of forecasting the stock price.
Wow.
Let's see here. So based on just only 3 methods, I'm seeing like $25 stock price average.
Versus, how much is it?
$16.
Oh,
What's their industry trading at on average?
I haven't looked at multiples or anything. Yeah, I didn't look at multiples.
Like a Crombie Fitch.
Yeah, I haven't
It's their
looked.
closest competitor. Right?
Yeah. Uh,
It's that Abercrombie.
I think that's all.
I don't know,
Pretty
you
much.
guys. So, like, for me, like, when I'm looking just for myself, right? American Eagle has been around for so freaking long, right?
Since 1997.
Yeah, so, like, how can it be, like, undervalued? You know what I'm saying? Like, what is driving that undervalued
So you,
proposition of the company? Because I feel like the company should have already, like, gained whatever value they have, and it should already, like, be going down their cycle, you know?
so
Or maybe their
it's,
cycle.
it's kind of like market reaction, and sometimes like usually market reacts is I think if you read like the Intelligence Investors, Benjamin Graham called the market is like kind of a voting machines. Even like if you read like Jeff Bezos, like one time he was in a meeting and like people were telling him like about how Amazon like is fluctuating ups and down, and he was like, the market is like a voting machine. It's like tomorrow, like I'm crazy, like I'm gonna go sell all my stocks in Amazon. The next day I see like Amazon is bullish, but like all the analysts are bullish about Amazon. I'm gonna go buy it. So it's more that there's this relationship between the behavior of finance as well. The market is mostly like driven by human behaviors, like how we act to things. It's all about emotions sometimes, and that's why I try like when I'm like making an investment decision, I usually like to sit down, like separate my emotion and go to someone who's really stupid, like has no idea about investment, and if it is retail, I'll ask them questions like, or sometimes go to the stores, talk to the people. Seriously, that's why I go like to American Eagle. I would
to the
like
kids.
like talk to them like, hey, how often like people are you guys busy? Like what time are you guys like?
Time do you go
Okay,
home?
so I hold Dollar Tree in my portfolio, and I have been holding it since like for the past 2 years. And this weekend I was looking into like checking out like Dollar Tree here in this town. And the one that I found, it was like somewhere, like it was like 25 minutes from Old Town or 30 minutes from Old Town, and I was like, I'm driving there. So I drove there. It was like mostly like, it was like shopping center area, and it was packed with people, and I wanted to see like someone that I can talk to, and I was like, hey, is it always? And then I spot like someone who works in the store. I was like, hey, is it always busy? Like, tell me more. Like, how often are you guys? He was like, we're always busy. Like, he was like, I'm trying to stock things, on the shelf, and that tells me a lot of things about like how they are running their business. I mean, it's one of the greatest business, but there is always the threat of China and the tariff trade. So as American Eagle, if you look at like breakdown, 30% of their sales is coming from China, and that's kind of a concern me. Like, but again, I talked to Tom. I think when did we meet? Saturday, right?
Yeah.
I mean, there's a company. I think I talked about it here today. Do you guys know how North Face get all their jackets and clothes? Who's their provider or supplier? So the company they used to have a partnership with company in Hong Kong, and this company in Hong Kong, once they know that, hey, there's this problems going on, the tariff trade. So when they did that, they went out and they create kind of another company. It's called Jerash Holdings, and that company is a Jordanian company. It's in Jordan. If you understand the politics in that country, so when Clinton was president, he signed an agreement with Israel. That agreement is anything that they export from Israel to the United States, they pay 0 tariffs on it. So what Chinese company been doing, they're really smarter. They are really smarter than us when it comes like to currency trading and manipulating the currency. So what they did, they was looking for another ventures or another ways to export a product to the United States. they went out to Jordan and they knew that there are 5 industrial parks in Jordan. These 5 industrial parks in Jordan are included in the agreement with Israel. So anything that you export from these 5 industrial parks, you don't pay on a tariff. So Jerash Holdings, who's like a supplier to North Face, what was the percentage? Was it 79?
80%.
Yeah, of their, they like 79% of their revenue is only from one customer, North Face. They send all the jackets, Polo, all these. This is crazy. I mean,
But you have to somehow get to Jordan, and then once it's in Jordan, you still pay taxes, right? And
so
Like-
taxes in Jordan is like not compared to the U.S. Like what is it like one? But also like so the company, if you look at like, I think the companies is still undervalued. But there's like one of my biggest concern is that they have only one customer, and once that customers will drop out, like the company lose 80% of their revenue, so the company will go bankrupt. But that's one thing that I look for. Always look for who's the supplier and what percentage of the revenue. Usually, anytime I see like anything exceeding like 10%, I usually disregard the company and find something else. That's as well one of my professor when I went through the value investing at Stanford. He was like, any company that is above 10% of their revenue, 10% of their revenue coming from one customer, just to drop it from your evaluation.
So what are the indicators that you're looking at? You said that you've set up some sort of search, and where is that? Through what?
So before I move to that, I'm gonna get that
Okay.
in a second. So I usually go also, like for example, if you look at American Eagle, what I usually go, I normalize their, so we talked about debt, right? So their debt is around 500 million, but that's not all of it. Okay. So I usually go normalize the earning of the company or the operating income by including all the leases. So the leases actually, when you look at them, is kind of like not recognized on the balance sheet because there's like a difference between operating lease and capital lease. So all of these are operating leases, and I go like capitalize them on the balance sheets and include them as part of the debt of the company. Because, for example, Tesla, they had a bunch of stores, right? And once like they started like want to close some of their stores, when you like discontinue the lease, you still have to make that payment, no matter what, because you have a contract. And I'm not sure how Tesla was able to get out of some of the leases. But anyway, so I add all these leases back to normalize the earning and reflect that in like total liabilities. And I'm looking at one factor is return on capital. Is I'm looking at anything is above 15%. And that company their return on capital was above 15%. Return on capital in terms of their cash flow was around, let's see here.
So return on capital, define that. So net income divided by.
Great question. So return on capital is that I take. So what's the capital? Is the amount that they spend or they invest, which is basically